Welcome back, and in our top business story today, in 2014, the UAE's economy grew 4.6%, up from 4.3% recorded the previous year, according to the latest statistics, and will stay on the growth trajectory in 2015. According to Focus Economics panelists, economic growth this year will come off the back of brisk diversification and increased government spending, as inflation tends to drop to 3.3% on the expectation of sustained softening of rents. The UAE will also be less vulnerable to oil price fluctuations than its GCC peers. The panelists expect the UAE economy to grow 3.5% this year, which is up 0.1 percentage points from June estimates. While for 2016, the panel projects a GDP growth of 3.6% and foresees inflation to average 2.8%. Economic data from the second quarter shows that business conditions in the UAE's non-oil private sector economy continued to improve. And although the Purchasing Managers' Index inched down in June, the rate of business expansion remains strong. Qatar is expected to be the best performer in 2015, followed by Morocco, while along with the UAE, Egypt will most likely grow the fastest, with a projected expansion of 4%. Lending by banks and financial institutions in the UAE rose slightly by 1% month-on-month in June to 1.46 trillion dirhams. That's according to the latest figures released by the UAE Central Bank. Banking indicators for June, when compared with May this year, saw gross bank assets, including bankers' acceptances, rise 1.2% to 2.4 trillion dirhams. Gross credit increased by 1% month-on-month to 1.446 trillion dirhams in June, while total bank deposits fell by 2.2 billion dirhams to reach 1.44 trillion dirhams, as a drop of 13.3 billion in resident deposits was noticed, despite an increase of 11.1 billion in non-resident deposits. The UAE Central Bank said that the money supply aggregate M1 decreased by 1.2% over month-on-month to 464.1 billion dirhams. Money supply aggregate M2 increased by 0.4% to 1.19 trillion dirhams, while money supply aggregate M3 decreased by 0.9% month-on-month to 1.35 trillion dirhams. The national central cooling company, Tabreed, saw its net profit for the first half of the year increase 3% to 153 million dirhams. According to a statement, Tabreed's strong performance continues to benefit from lower finance costs and further growth across the UAE and GCC, with over 13,700 refrigerated tons of new connections made in the first half of the year, taking total connected capacity to almost 1 million RT. The first half of the year also saw shareholders approve a 5-fil dividend and the buyback of 28% of the bonds held by Mubadala. The buyback will increase earnings per share and reduce annual financing costs. The UAE remained the largest market in the region, accounting for 59% of the BMW Group Middle East's total sales in the first half of the year. BMW posted a 6% increase in sales in the Middle East during H1, delivering 16,706 BMW and Mini vehicles to customers in 12 markets. Abu Dhabi again came out as the biggest seller, with 6,962 cars sold. They were followed by Dubai, Sharjah and the Northern Emirates with 2,934 and Saudi Arabia with 2,243. Lebanon saw growth up by 57%, Oman by 29% and Jordan by 18%. According to a statement, the X model range accounted for 55% of overall Middle East sales, with the BMW X5 alone selling 5,288 cars, up 109%, and the BMW X6 selling 2,321. Meanwhile, the BMW 5 Series saw 2,111 cars sold. The Mini brand saw a 13% increase over last year's figures, selling 839 cars across all regional markets. Dubai reported a 35% increase in Mini volume sales, while Lebanon experienced a 51% increase.